Thank you. So good evening, everyone. Welcome to Art Southampton. Over the last couple weeks, I've been inundated with one question by journalists, by collectors, by financiers, and that's how did we get to where we're at today? A couple weeks ago in New York City, $2.5 billion worth of art was sold in 1 week. One of these transactions in particular, it was a $100 million work that was consigned by a syndicate, basically an art fund that owned the work jointly. It had a loan against it, and it was consigned to the auction house. The auction house had an auction guarantee on that work, and then what they did with that guarantee is they packaged that guarantee up and sold it to a hedge fund. The hedge fund then levered that up and sold it to their investors to get a return on their money. Now, that may or may not have made any sense to you, but what I'm trying to get across is that we are now in an era where the art market is a complex network of financial institutions, private banks, hedge funds, special opportunity funds, art galleries, and somewhere in there, there's actual artists that are making art. And so what I want to, in hopefully a half hour, do for you is try and help you understand how, in the course of the last 50 or 60 years or so, we went from art being a niche lifestyle class collecting hobby to a $60 billion a year global ecosystem in a place like this, like we're seeing today, these art fairs and all the types of economic activity that is connected to it. So the first step is we need to go back. We need to go back actually to the early 20th century. It's a long-held story. I think anyone who's studied art history recalls that in the late 19th century, the art market was actually a state-sanctioned academy. It was a state-controlled market.